Everybody, welcome to Managerial Accounting Relevant Costs for Business Decisions. We're now going to be looking at make or buy. And let's just kind of take a look at this real quick. So my disclaimer and copyright notice is that the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2024 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Presentations from time to time, I will use information from third parties, the third-party information. The third-party information is the property of those respective copyright holders, and I make no claim to that third-party information. Okay, let's have some fun. So the inspiration of my company here today is on this particular jersey combination, Otani Betts. Oh, it's exciting. I want to thank my son, my older son, for sharing that with me. I thought it was pretty funny. So looking at over here, as of 1/1/24, Otani Betts is presently creating its own gaming tables in Riverside, California. That might be next to the University of Riverside. Maybe somebody went there or not. I don't know. In addition to gaming tables, OBI also produces slot machines, wagering stations, and a variety of other games of chance products. Only the gaming tables are located in Riverside, California. On January 1st, 2024, OBI is approached by its production manager. We probably don't want to trust him, Mizuhara, about producing the tables outside of the United States. Here we have the current costs for the gaming tables, labor for 20,000 tables, materials, variable overhead, and then we have our annual lease costs. Not including the lease, if the facility is closed down, OBI estimates that there could be a one-time facility closing cost, including layoffs, of $1 million. However, if outsourced, OBI could produce the gaming tables for $250 each, including shipping. The lease ends in December 2026. If the facility is closed down, the lease would have to be paid for the remainder of the lease period. And over here, I should also say here, including layoffs costs, but not including lease costs of $1 million. However, if outsourced, we could purchase, so prepare an analysis as to whether or not OBI should continue to manufacture the gaming tables in Riverside, or if the tables should be outsourced. Assume that OBI will be able to sell 20,000 gaming tables each year through December 2026. And are there situations when products should or should not be outsourced? So let's go through and look at this, if we choose to if we choose to buy them, right? Which means we're outsourcing, buy the tables. What does that look like? Well, we're really going through and looking at this for a period of 3 years. And what we're really trying to go through and do is to focus on the cost, right? We're not giving anything about the revenues. So if I buy the tables, right, for each of the next 3 years, right, my units, tables, basically I would be purchasing 20,000 units at a cost of $250 each. Okay, so coming right over here, I've got 20,000 units at $250 each. So my cost, if I'm outsourcing or buying the tables over here, is going to be roughly $5 million for each of the next 3 years, right? So that it's if I'm choosing to buy the tables. However, that is not the only cost, right? I can purchase the 20,000 gaming tables. However, I'm going to have a one-time closing cost of $1 million, right? So if I choose to close the factory, to lay off the employees, whatever else may have you, it's going to cost me $1 million. I am also not going to be able to avoid paying the annual lease costs. which I would have to go over here and pay each year, right? So the cost to me to go through and to do this, to buy the tables or to outsource, is going to be 6,180,000 in year one, 5,180,000 in year two or in 2025, and then 5,180,000 in 2026. So this is what it would cost me for the tables if I chose to purchase them. I'm going to have to go through and lay off staff, right? Layoff costs are going to be $1 million. And then to buy the units, it's going to basically be 5 million. And so these units are not necessarily going to be costing me 250 each. But if I look at this over here, my units, my per unit would end up being roughly about 309, 259, right? So this is if I'm choosing to go through and to buy the tables. What are my costs if I continue to produce? So what does OBI have to kind of go through and deal with, right? So let's go ahead and take a look. If I'm continuing to go through and to produce the units, and let's try to make this as comparable as possible. 24, 25, 26. So my annual costs to build 20,000 units is going to be 5,620,000 per year. Okay, so over here, where did I get these numbers from? Just adding them up. This is the current cost for the gaming tables. So for me over here, my current costs to build 20,000 tables is going to be 5,620,000 basically each period. And over here is that my units being produced are still going to be the same as the 20,000. So my per unit is going to be roughly 281, 281, and 281. Okay. So as we look at this over here, right? And I could add up all of these numbers together and I get 16,540,000 versus 16,860,000. Let's go through and kind of talk about some of the pros and cons of doing either one of these, right? So the pro of buying is that over time, my costs will be less, right? So, or actually, I take that back. If I'm buying it, my costs are going to be less. However, my costs in the first year will be higher. Okay. So, right, because so over time, if I take 16.86 million of continue to produce minus 16.54 million outsource, right? So it's a little bit better. However, I want to say something right here. I'm not using present value, and I really should be, because dollars being paid out today are not the same as dollars being paid out tomorrow. But on an overall basis, right, as I'm looking at this, these numbers may actually be a little bit closer, because although I'm paying more out in year one, over time, I'm paying a little bit less. But the other advantage, the pro of buying, is that if we lay off in 2024, we will not have to incur that cost in the future, right? So what do I mean by this? Well, what if we decided in 2027 to buy? We're still going to have this $1 million closing costs, right? So if we're going through and laying off, if we're deciding to close it now, we're basically saving money, right? So I sound like pretty evil, but this is one of the things. A con for this is that people will lose jobs. And that's not never a pleasant thing. But if costs are too high in California, Toyota left, Nissan left, um, any kind of manufacturing in California has left. And so, but that is still something, though, that it's not a fortunate incident for something to happen. Why do companies leave California? There's a variety of reasons, including our labor laws are extremely complicated. Other states have very much more employer favorable laws, but it's still people will lose jobs if we outsource. Okay. Another con is we are leaving our fate to the country we are outsourcing to, a loss of control. This is something that's very, very important. There is a book that's out there, and this is not a swipe at China, but there was a book called Poorly Made in China. And this is a very interesting book. It's a book that I read a while ago, but what it talked about was really about how that basically the first product that came out looked great, but then subsequent products didn't look as good. They made a great sample, but subsequent products didn't look as good. If you are going through and choosing to outsource, right, you are leaving the fate to the country you're outsourcing to. It's a loss of control. If we keep the production domestically, we have more control over the quality of our product. This really is going to kind of go through and depend on the industry you're in. How comfortable are you with losing control? Now, if this is a gambling table, we probably really don't care because there's no secret sauce. But if we're making airplane parts for Boeing, we probably want to keep that production here in the United States, right? So what are some of the other, pros or cons of going through and doing this? Well, obviously, so costs are going to be less over time. Costs in the first year will be more. Another con could potentially be is the uncertainty of being able to purchase tables from the outsourced provider at the same rate in the future. But what we also might say over here too, meaning that can I still get it for 250 per unit? But a pro maybe is that if we buy, we will not need a facility to build. So again, when you're going through and looking at this, there's a lot of different variables about making or buying. And a lot of times it comes down to control. We may, if we want more control, we may want to keep this in-house. But again, there's not necessarily a right or wrong answer, right? If we go through and quantify this, it doesn't seem to be that much of a difference. However, when we look at it from the perspective of, well, this is less and we're taking our hit up front now, this may be better. Okay. However, people are going to lose jobs. It could cause we're leaving our fortunes to the outside. And these are just different types of things that you want to be going through and really kind of thinking about as you're making the decision to outsource, right? So this is really the biggest thing is that if we're outsourcing, it can be great because we're saving money. However, when we do outsource, we're losing control. And that's depending on the product you're making, that can make a huge difference. But in any event, I want to thank you for joining me here today. This is going to conclude our series initially on relevant costs for managerial accounting decisions. I hopefully you've enjoyed these videos. I look forward to seeing you on future videos. Have a great day.